every investment has an element of risk in it.
There's going to be a maturity of about 1.1 billion that was previously offered. The rates, right, is also very, very attractive because Nigeria has never defaulted on its Eurobond.
Of course,
You know, and Nigeria is not a country that, you know, we default on its Eurobond. We are blessed with oil, we are blessed with minerals, right? So Nigeria is, you know, it's safe.
Hello guys, welcome back to Investment Talk with Chuka. Apologies, I've been away for over a month. End of the year activities are always very busy. This is the time to take stock of what has happened in the past months, and as we get into the end of the year, you know, there's so many activities, but that does not mean I will not have time to give you one or two information as regards investment. Today we're going to be talking about the newly issued Eurobond by the federal government. All you need to know about it. A lot of questions have been asked about what is Eurobond, how can investors key into it, what are the advantages and disadvantages. Okay, so today we are going to unpack all that and then give you a better perspective on what Eurobond is, and then better educate you so that you can make your informed decisions. You get information, first-hand information, which you can't get anywhere else. So today, without wasting much of your time, I'm going to be bringing my friend, my brother, FAHAD ALIU. FAHAD, welcome.
Thank you very much.
You know, it's been a while.
Yeah,
it's been a while, and then I know that even you two, you're equally busy.
It's crazy.
Fixed income markets has been up and doing, especially with so many things happening, then the Eurobond as well.
Yeah,
so very quickly I would like you to you know, just quickly give us a brief summary of what transpired, you know, during the, I think it was last week that the federal government issued this Eurobond. Let our viewers know what Eurobond is all about, and then how investors can key into it.
Thank you very much, Chuka. Hello everybody, it's always good to be here with Chuka, where we help you dissect information and investment decisions. 2 weeks ago we had an Eurobond issuance by the federal government, where a total of 2.25 billion was offered by the government. In all, the subscription was very, very healthy at about 13 billion subscription, and they sold the same amount that was offered. Let's take a little bit step backwards. Let's talk to our investors. You know, like we always do here, we start from the scratch. Let's start with the Eurobond itself. What are Eurobonds? What do we understand by Eurobonds for those that are new to this fixed income investment? Yeah, Eurobonds are bonds. They are like the regular bonds, but they are bonds that are issued by a country in a currency that is different from the country's own currency, right? Our currency, our domestic currency here in Nigeria is the Naira, right? But these bonds are issued in US dollar. So because of that, and they are being traded in the international markets, right? So because of that, they are known as the Eurobond. The euro there does not mean euro as in the currency. No, it just means external. So the euro there in front of the Eurobond means external. So it is issued in an external in the international market, and it is dominated in a currency that is external to our own domestic currency here, which is in USD. There's going to be a maturity of about 1.1 billion that was previously issued by the federal government. That maturity is happening on the 20 something of November 2025, right? So because of this maturity, the government do not want to lose this money out. The government does not want to pay out, considering the fact that we are still trying to, you know, balance our exchange rate issues that we're just recovering from, right? So because of that, the government decided to reissue a new Eurobond in order to fulfill that obligation and also fund the remaining budget deficits for the year, right? So a total of 2.25 billion was offered across 2 maturities. We have a 10-year maturity and we have a 20-year maturity. The 10-year maturity maturing in January 2036 and the 20-year maturity maturing in January 2046. But one good thing about it is that it was highly oversubscribed. and because of this, it shows the confidence of investors, the investors' confidence in the Nigerian market. So it shows that our foreign investors, they are willing to come into Nigeria, lots of them willing to come into Nigeria, you know, because of the stability of the country. Currently our rating has been upgraded to stable, and we are currently at B. So because of that, you know, investors are happy to bring in their money at, you know, attractive yields. You understand? That's a good news for the Nigerian economy as a whole, right? 13 billion subscription, 2.25 billion sold across 2 maturities, and the rates, right, is also very, very attractive, better than rates. Yes, 8.6308 for the 10-year maturity, and 9.1279 for the
that's fantastic.
So that's very, very fantastic, because US of equal tenor at about 4%. You know, 4%. So this is way, way better. You know, this is way, way better, considering also that it's in USD. The inflation that it is also in USD. So we are going to use the US inflation, you understand, to benchmark it, and not the Nigerian inflation rate.
I would just like to add that you know, for the sake of people who, you know, you mentioned the length of maturity, and a lot of people will get scared. You know, in fact, I once had a very senior colleague who you know, I was trading local bond, and then I bought 2053 bond. The man was screaming at me that, look, why are you buying 2053 bonds? I'm not going to be who is going to be alive to you then? But this is just for investment purpose. So that people don't get scared. You know, the beauty of it is you invest in a USD instrument. So one of the advantages is the fact that for example, for those who have kids abroad, for those who have businesses, or who have one thing or the other to do abroad, you do not need to start changing exchange rate. You know, so the Eurobond gives you that leverage to, you know, to assess whatever your obligations are abroad, you know, from the proceed, because the proceed is in dollar. So that, I think, is important, that people should also understand that. You know, so but again, I want to ask, what are the other information that people need to know, especially with risk? Right. So I mean, you know, every investment has an element of risk in it. So what are the risks in investing in Eurobond?
Okay, thank you very much. As far as the risk is concerned, there are a couple of risks, you know, that comes with Eurobond investments. First of all, we have the currency risk, right? When we talk about the currency risk, we are talking about the risk involved because the security is issued in a different currency other than the domestic currency, right? Because of that, if it was issued in Naira, the government can, you know, find a way to just pay you back your money, either printing or whatever. It is going to affect inflation, but we know. But you know, it's easy for the government to pay you back in Naira. But the fact that it is issued in US dollar, right, it makes it quite difficult to assess, you know, USD. So it increases the rate of default if the country does not do well. You understand? It increases the rate of default if the country does not do well, because it's not their comfort, you know, currency that it is issued in. That is one. And we also have political risk, you know, especially, example, what happened in Ghana, right, last year, where their Eurobonds they were defaulted on, right, they had issues with their Eurobonds, and the whole market crashed, especially on the Ghana side, you know. So stuff like that are, you know, very, very risky, and you know, there are things that we expect, right, to have, and that is why there's a premium, right, on the investment. There's a risk premium on it. The reason why it is 10 years and 8% is because of that risk premium. You understand? As much as it gives you comfort, but one thing we are just very certain of is Nigeria has never defaulted on its Eurobond.
Of course,
you know, and Nigeria is not a country that, you know, will default on its Eurobond. We are blessed with oil, we are blessed with minerals, right? So Nigeria is, you know, it's safe. It's safer to, you know, invest in Nigeria Eurobond than any other country's Eurobond. However, we cannot underemphasize the risk, you know, involved. You cannot understate it, the risk that is involved, you know.
So I mean, you're absolutely right, and that's why here Investment Talk with Chuka, we look at the both sides, right? So we're not just telling people the opportunities, right, or the benefits only. We're also looking at the other side. So but end of the day, I mean, everything in life is about risk, right? So it depends on your risk appetite. Yeah, and so for this particular investment, one of the remarkable thing about the Eurobond issued by the federal government was like, that event happened about the time that Donald Trump, classified Nigeria as a country of high concern. Yeah, which ordinarily would have scared, particular concern, which ordinarily would have scared most investors, but rather it's the other way around. Yeah. So the point I'm making, viewers, is that yes, it's lucrative, but then we need to also open your eyes to one or two risks but again, as a trader and also as an investor, you need to weigh the risk, right? And you can't, if there's nothing in life that is not risk. As an investor, you need to look at that. So generally, for investors, right, to be investors, if you want to give an advice, just what we're doing now, to someone who is still standing on the fence on investing in Eurobond, what would you be telling the person?
Okay, emerging market investment, like you said earlier, comes with its risk, right, which is the currency rate, like we mentioned. But however, in the case of Nigeria, it's one country that I'm very, very confident on, that they are definitely going to settle their obligations, right? And because of there's a maturity happening this year, and because of that maturity, they had to roll over and give us a new one. Although that's a risk on its own, right? But I've got confidence in Nigeria securities, and I'm sure that obligations will be met and investors are going to be happy at the end of the day. 8% is not something I'm willing to leave on the table for a 10-year duration, whereas US securities, US treasuries is at 4% level.
Exactly.
So that 4% on it is more than enough premium for me. Personally, for me, it's more than enough premium to cover for the risk that is involved with bringing it down to Nigeria.
So I mean, that is why you see that with all our challenges politically, you see still investors keep coming into Nigeria. When I ran through the stats, between January this year to July this year, FPI have invested about $15 billion into our economy, and by now it has also increased further. So that shows you that, look, irrespective of the issues we have, there are still opportunities in Nigeria, which is better off out there. You just go out there, weigh your risk. If you want me to advise, I will advise that you have some investments in dollar. That way, you're able to hedge, against exchange rate fluctuation, and then of course, gives you more stable investment opportunities and investment growth. All right, guys, this is it. Till we meet again. This is your investment advisor, Chuka Nwachukwu. Bye bye for now.